What's up YouTube? It's Todd Horst here with Tasty Tracker, and today I have another small account challenge update. The last video was opening on Amazon and Apple, and so this video will pick up from 12/16. That was last Wednesday, so almost a week ago. Yeah, so I'm going to pick up from there. The first one being an open for Walmart put spread, obviously, which is the typical go-to here for this account. Since then, Walmart's gone nowhere but down. At this point, it looks like it could potentially see support here at this level if we're looking that back here at support resistance, somewhere in between here in the 142, 143 range. If that doesn't work, we could see support on the 100-day coming in around 142 to 143, depending on when that occurs. So we can see here that the MACD is on its way back up. RSI is still on its way down, but of course, typically when we hit these extreme downs, we can see a big jump. Part of this downturn could be the recent trend. Part of that could be the dividends here that occurred. We can click on that and see that that was December 10th. Typically, stocks will go down a bit because of that, not this much. But let's see here what that position was for. So we collected 200, and let's see, that was 48% in the money at the time I put it on. So it was aggressive to begin with. So the sold leg there is 145. So if we go back to the chart here, it's by no means are we that far off. And again, if we find support here at 142, we should be fine. That's a February position. So it only needs to come up $2 or $3 here in order to be profitable, stay above that range. Way out till here. Let me draw the marker on for February. 19th. Yes, February 19th. Okay, so that's right. Earnings is right before that. I definitely will expect to see some sort of melt up to earnings. It doesn't have to be anything dramatic, but I can also draw a trend line here, which I had one here previously, but obviously that needs adjusted down. So now I have two at the same spot. But anyway, yeah, so I think right here is a logical bounce point. Of course, I've been saying that from the time I put it on, but let's go over to that position. Right now, down $80. 50 of that is from today. So, you know, if you thought this position looked good, now would be a good time to actually put it on. Typically, the best entries are at the, you know, darkest hour kind of thing. You know, that's why they say be fearful when others are greedy and greedy when others are fearful. Big red day here, and so yeah, so that's where Walmart's at. I think I've exhausted talking about that one. Next, I closed Microsoft, and that was for around $200 profit. And that day I opened up MA and Target, Mastercard and Target. So yeah, Mastercard has been in this range, and I do expect financials to turn up here any moment. I think stimulus bill could help these as well as post vaccine world. Kind of been trading in this range the whole way back here to the beginning of August, and going basically nowhere. We're kind of at the bottom of the range, and so let's see what I have here. That was the 325. I personally like this view better, but yeah, 325, and I collected 165, so pretty good premium. Let's go back to the chart. So 325 is the whole way down here. That's below all of the SMAs, and to me, what I see as a logical support. So that position right now, I'm going to check the Walmart box. That was the position we just talked about. That one is still very good, and I'm down $44, and honestly, I would probably, if I were to enter that in right now, I probably would go even slightly more aggressive to the 330. What do I have? Yeah, 325. I'd probably jump up to the 330 and collect substantially more premium. Let's go see what that would look like. So if we did the 330, that's going to be all messed up because of those other positions. $206. Yeah, so that's something that I would consider, but again, that's 47% in the money, so would be quite aggressive. When I put this on, it was 39% in the money, so that's right around my typical 40%. And 160 is what I typically aim for. Second one was Target. Okay, so again, I'm not really ever looking for the best entry. In fact, you can, if you watch my trades, you can probably make better entries 2 or 3 days later. I tend to front run things a little bit too early. But here again, I would have said yesterday could be the best day to have entered. MACD is definitely looking good. RSI is looking good, both ready to curl up. And if we're following this wave tendency here, we're at the bottom of the wave. The only negative there is it's below the 20-day. So that can act as resistance, as it kind of did today where it bounced off of that. But the 50-day has been great support. So I anticipate this turning up again, especially through the holiday season. Okay, so that brings us up to today. Yes, today, where I closed Apple. That one was an auto close, around 150 profit. And then I opened up 3 new ones today. Actually, let's go look at the target position before. There we go. So yeah, so I have the 165, and that's the whole way down here. The idea is that the 100-day will catch up something like this, and within a week or two, the 100-day will be at that price and should act as really great support if it ever came to that, though I don't think it will. Okay, moving on. So Costco. So I actually put this position on yesterday in my IRA account. And so you can see that would have been pretty good timing, but today is even better timing, assuming the 100-day holds. That doesn't mean it will have to, but look at how bad the RSI and MACD look. Now, there's decent volume yesterday and the day before on selling, but today there's actually not that much volume on selling, and did have a bounce off the 100-day. So I would expect the MACD to start losing steam here, but this is Costco, just a beast of a stock. So yeah, even with post-vaccine, I don't see how people stop using Costco. In my head, they're going to use it more. Costco had a huge run-up because they managed the coronavirus efficiently, much better than a lot of other brick and mortars. And so, honestly, I would expect things to pick up even more. But that's just my bullishness on Costco. So anyway, so yeah, so if we look at the Costco position, that's the 255, 26. Man, can't talk. 355, 360. So let's go look at that on the chart. That puts us right here, right at the 100-day. So extremely bullish at this point. Let's see, what did I note the percentage in the money? No, let's just go look at it. Okay, yep, 50%. Which makes sense because it's right at the money. So it could go either way by using the standard deviations, etc. let's go ahead and hit that graph. So yeah, very small margin, but of course, because of that, we're compensated nicely with a 211. Again, typically I'm looking at 160 for a $5 wide, so 211 is very nice premium, much better than I did on the other account. So, so yeah, it does show that having two accounts allows you to, if you play them differently, you can play one play on one account and then see how that works out and develops, and then do a play on the other account, either better strikes or better premium, etc. So I've benefited from that the whole way along here, this whole year doing the small account challenge, where if I see something that looks like it's finally a good time, a better time to enter, but I still believe in my original thesis, then I can come over here, collect an even better premium, and so my ROI on this account is better than on my other account. Also because I'm running with more cash deployed here and less of a buffer reserve. And then lastly, I do stocks on my other account, long-term holds that I don't plan on selling. So those are increasing in value, yes, but not to the rate at which options are, obviously. So yeah. Anyway, the point being that timing can make a huge difference if you are patient enough, and that's why I did a video the other day on alerts, because that's one thing I'm really looking to improve this next year, is to enter in closer to to have better entries closer to a bounce. Uh, you know, you know, yeah. I guess I'll leave it there. Okay, so covered Costco. Next is JPMorgan. This one wasn't on my watch list. I haven't played them in quite some time. I have played them before profitably, but not quite some time. I don't even know if I played them since COVID, honestly. Obviously, I could look that up if I felt like it. But yeah, what we have here is a huge indecisive consolidation from post-COVID. But then once we get to stimulus and uh, back here, and then in here with the post-vaccine as banks look to recover, um, I think there's a lot of room to grow. The stock was back here at 140 before COVID, and so at this point, trading at 125 gives us an easy. I mean, we should be very easily be able to hit 130, but $15 to 140 seems very reasonable to me. Earnings is coming up, which could be shaky. However, we can see uh, the RSI is trending up nicely, and it's heating up. And again, I've said this before. I think as a new trader, once it started getting in these ranges, I would look to put on a short position, as in looking for it to roll over, and that's really just not the way it works. The RSI heats up over time until it hits an extreme like we have back here, and even this could have gone better in a different environment, but yeah. So RSI is heating up, and so you should be considering putting on positions here and then exiting when it gets up to 80 or so, um, but not looking to short the position. I hope that made sense. So anytime along this path, it's good to enter and then exit up here, as opposed to what I was initially doing when I got started, which was once we got in this range, I was beginning to look for it to roll over, and that's not the way it works. It'll come up here, and then even at this point, I don't play bearish positions very often, if at all, anymore. I'll rather sit on my hands and wait for a bullish setup to come. But anyway, enough about that. The MACD is looking great. So what do we have here? This is the 120. So 120 puts us down here. It's just below the 20-day, which doesn't give us a whole lot of buffer. But we got 176, which is pretty good. And I think this is really poised to have another substantial leg up. Like I said, $15 seems totally reasonable to get up to 140 for me, especially as potentially not only the stimulus that they're working on now, but additional stimulus is to come out in the following months, plus the looking forward to the economy coming up. And it's really consolidated here for the last 2 weeks. So I do think this one is ready to pop. Hopefully this will be a shorter position, thinking of a 2-weeker kind of instead of a, a full month or so. That would be the hope. 45% in the money. Last one is BA. When I put on JPM, I started thinking about their post-vaccine, and obviously airlines is sort of the easiest to pick on. I only did a half position because of how risky this is, but we can see here BA was at 352. Now they've had a slew of other issues over the past year or two, not totally apart from COVID, if you get into all of the safety stuff, etc. But I do think they've come a long way to correcting those and getting their orders coming back in, etc. So I don't think it's going to jump up here to 350 by any means, but I do think we could see 275. And we're right at this support resistance here. We came down here to test it again. I don't consider this a fail, at least at this point of testing this line. To me, there are looser margins. Things don't stop on a dime. But so I'm really expecting a move something like this, and maybe a melt up into earnings on the third here. But either way, I only did a half position because if this does turn out to be a total flop, I won't lose that much money. But again, I think this is poised for a quick turnaround. Okay, so that brings us up to today. If we go over to the balance page, one thing that's I think interesting is collateral is going to keep coming up as the account gets larger, because I'll be able to have more cash deployed. Obviously, as my account value increases, I'll deploy more and more and more. And so what you get is these big jumps, and then it slowly degrades as I pull positions off, and then it'll jump up, and then it'll again, come down. So jump up, that kind of motion. And typically, as the collateral is decreasing, like here and here, is when we see the inverse of that, of my net liquidity coming up if those positions are going well. So I think it's interesting to take a second to look at the trend line of the collateral. Is actually even steeper than what my net liquidity is. And we can see here that I have almost 8,000 deployed. I deployed almost $1,000 today. And when you start getting into the $10,000 deployed, you can make a very nice amount of money just off of $10,000. Much more, I think, than what people, are thinking. And I think part of the reason they don't is because they start getting frantic and throwing money around. But if you can keep a cool head with $10,000 deployed, you can actually make quite a bit of money per year. Let's go over to the home page. Okay, so I don't have any stocks in this account, but you can see some of the new charts that I've added here to make visualizing this a little bit easier. Now the XIRR is still pretty messed up. I'll get that fixed here eventually. But we can see the cumulative here is the bar that I'm most interested in. And what I have here is SPY cumulative, and we can see that at this point in the year where SPY is about 14%, that it's increased over the year, and I've gained 310%. 310%, most people are hitting those kind of figures if they're doing a lot of gambling. And if you followed me, the plays have been pretty mundane, and hasn't been that much research involved. Nothing special. Same tickers over and over again, which I'll get to in a second. But you don't have to um, do extremely risky plays to still get a very good return. Yes, during this period, some people would have made 1,000%. And yes, 2020 on the whole has been a fairly easy year, given that the chart has gone up for a large majority of it in a quick pace as well. So making money on this kind of increase isn't hard. So that's not my point, but my point is that 310% is nothing to laugh at, and is definitely something that we achieved with pretty little risk. Also, we can see here since June, haven't had a negative month, and of course, right after Corona hit, had March, April, May, had nothing in March, but April, May had to cut the positions that were losing from COVID. And then this was my first month with the small account challenge. So this was legacy from 2019 before I started the challenge. But here again, none of these numbers are spectacular. I mean, I would say August is pretty good for the account size, but all the way along here, I'm just chipping away, making a couple $100 every month on a small amount, and and making progress. And again here, at the end of a year, making about 6K. So looking at the winningest securities, again, I thought this was interesting sort of as a year-end review a little bit to look at some of the top tickers that we've had this year. And Sedge, I've had 0 losses, 9 wins, and over $1,000 netted. So, that's Sedge to me is a strong conviction stock, which incidentally I don't even have on at the moment. One nice way is you click on security here and then it alphabetizes it. But I don't even have Sedge on at the moment. But to me, it's good to get intimate with a stock and know its range, which is funny. Today it went the whole way up to 336 and backed down. Through here it hasn't given me a good entry spot that I felt confident in. But yeah, to me it just goes to show that if I continually play the same stock, but get familiar with what's a good deal and what's not, you can really have some good entries and make a lot of money just off the same ticker over and over and over again. Kind of same with Microsoft here, 6 plays, all winners. Apple, I only had 1 loss, and we can scroll down through here, and do I have the total win and loss ratio? I don't know that I have that. This is the number of trades that are open, and this is the number of trades I've closed. Oh yeah, right here. So 74 wins and 10 losses. So I really haven't had that many losses to go through the whole year with 74 wins and 10 losses is pretty great. And again, that includes January, which is before I started the 10K challenge, and then COVID. So 10 losses including COVID is pretty good. But yeah, so we can see here, let's just go over these. So I've got something like 20 stocks, 25 stocks that I've made over 100. By far the bulk of my money has come just from these handful of stocks. So yeah, I've made some money off of these, lost some money. Baba's the big loser of the of the year. And trying to redeem myself with Target. But yeah, for the most part, I'm only dealing with a handful, and if we're looking at close to 500 or more, it's only under 10. 1, 2, 3, 4, 5, 6, 7 stocks. So really focusing on your area of the market, I think, does a lot. This bear neutral bull chart doesn't work yet, just in case you're curious. But yeah, so I guess that's all I wanted to say, and this is my sort of update, and then the annual recap. So if you have any questions, let me know. Otherwise, we'll leave it there, and I'll talk to you next time. Thanks.